If I had 100,000 shillings and wanted to build wealth in Kenya, I wouldn't put all of it in one investment. Instead, I would spread it across various investments based on my goals, my risk tolerance, and how soon I might need the money. Let me show you exactly how I would do it. Welcome back to Build Your Wealth, where we talk about personal finance, investing, and practical ways to build wealth. If this is the content you are interested in, please subscribe and join us in the wealth building journey. If you have 100,000 sitting in your bank account and you're wondering where you can invest it, this video is for you. And this is just a quick disclaimer. This is not our personalized investment advice. This is just an example of how I would allocate 100,000, and yours could be different depending on your financial goals and your risk tolerance. So the first step that I would take is that I would not invest all the 100,000 first before I ask myself these three important questions. The first question would be, do I have an emergency fund or a sinking fund? Remember that if I take all this money and invest, for example, in a long-term asset, and I do not have an emergency fund, in an event of an emergency, I will have to go into debts in order to cater for this emergency, or I would have to liquidify my investment, which can lead to a loss since it's too soon. Also, I will consider if I have a sinking fund for events that I am looking forward to in a few months. The next thing I would consider is if I have expensive debt. That one will make me to at least sort the debts first, or put some percentage towards the debts and then do the rest to my investment. And the third important question would be how soon I will need this money. So that will determine the type of investment vehicle that I will consider. The first step is just because investing 100,000 while you have a high interest debt or no savings or no emergency or no sinking fund at all would not be the smartest move. The next step that I would take is, assuming I have no high interest debt and I have a working emergency fund and sinking funds in place, I would allocate the 100,000 in this way. The first 30K would go to money market fund for liquidity. So this will enable me to earn from the interest rates while also not exposing all my money in fluctuating markets. Yeah. So that would mainly be for liquidity purposes. The second investment is Treasury securities, and I would allocate 30,000 towards this, and this is mainly for fixed income. So this, I will take advantage of the treasury bills and the treasury bonds such that I'm able to earn a fixed income from my coupons and during maturity dates. This will depend on my investment horizon and the particular opportunity available during that time. If there is a bond in the market, like the infrastructure bond, like there is one now, I would take advantage of that. The idea is to have a relatively conservative part of my portfolio while earning a return on my money. So for treasury bills and treasury bonds, the minimum investment is normally 100,000 and 50,000 respectively. But in this case, you notice that I have allocated 30,000 to this particular investment. So what I will do is that I will take advantage of the unit trusts, whereby I will invest through the fund managers so that they can introduce my money through the bond fund to the treasury bond and through the balanced fund to the treasury bill. This way, my money would have been introduced to the treasury securities, but indirectly without having to meet the minimum amount required. The third investment option would be the Kenyan shares, and I would allocate 20,000 shillings to these for the purposes of growth. So in this case, I would allocate 20,000, but I would not just wake up and buy any share that is trending. I would first have to do my research, do the due diligence, find out about the company's financial performance, their valuation, their profitability, dividends where relevant, their competitive position, and things like future prospects of the company. Also, I wouldn't put all the 20,000 in one company. For example, in Safaricom, I would diversify the 20,000 across various sectors such as telecommunication, manufacturing, agricultural, and all that, so that if one of the portfolio is high, the other one is low, and that. We've talked about how to buy shares and how to select the companies. If you are interested in that, we have a video on our channel. You can just scroll down. And one tip is that if you don't understand what you are buying, don't just buy it because someone on social media said that it's the next big thing. Buy because you are willing to buy and hold the share. The fourth investment would be REITs, which is Real Estate Investment Trust, and this is mainly for diversification of my portfolio. I would consider putting 10,000 into a diversified investment such as REIT or another diversified investment depending on what's available or what's appropriate for me at that time. The fifth allocation, I would call it opportunity or wealth building fund. And this is very interesting because it's not a specific investment. I would keep 10,000 available for an opportunity. Maybe there is a business or a course that improves my income generating ability or an opportunity to add to an investment when the timing makes sense. Remember that your biggest investment may sometimes be increasing your ability to earn. So I would keep this 10,000 or put it in my business that is already running in order to increase my ability to earn or improve my skills, which will in turn lead to more money or wealth creation. So this is an opportunity fund, 10,000. But here is the important part. There's no one perfect way on how to invest 100,000. Someone who needs the money in 6 months wouldn't necessarily have the same portfolio as someone who is investing for 10 to 20 years to come. And someone with high risk tolerance won't have the same portfolio with someone who is interested in capital preservation. Also, someone with an expensive debt may need to deal with that before they start investing aggressively. The goal is not just to have 100,000 shillings invested. The goal is to have a portfolio that matches your goals, matches your time horizon, and your ability to handle risk. And once you've invested the 100,000, don't just walk away. Keep contributing because 100,000 is not the destination, but it is just a starting point. If you had 100,000 today, how would you invest it? I would like to know in the comments how you would allocate it. And if you're serious about building wealth, subscribe to Build Your Wealth for practical financial education and investment content. Thanks for watching and bye.